Why the financial AI call center requires an execution governor. Moving past the chatbot. Why deterministic completion is the only path to regulated AI. In the world of high-stakes financial services, the move fast and break things era of AI has hit a regulatory wall. While many banks have successfully deployed conversational bots for basic balance inquiries, a massive gap remains when it's time to actually do something, like opening an account, modifying a mortgage, or verifying a high-value transaction. What's missing is not more intelligence, but a completion and compliance layer that can safely execute regulated outcomes. The industry has realized a hard truth. An AI call center that can only talk is a liability, not an asset. To scale, financial institutions don't just need better natural language. They need a deterministic body that can execute regulated actions without the risk of hallucination. The compliance barrier, why 40% of AI projects stall. Financial services operate under the constant scrutiny of regulators. In this environment, probabilistic outcomes are unacceptable. If an LLM misinterprets a customer's intent or hallucinates a fee waiver, the result isn't just a bad customer experience, it's a compliance violation. This is why we are seeing a shift in strategy. The modern AI call center is moving away from black box automation and toward a governed execution model. There are three specific areas where traditional AI, or more precisely, probabilistic conversational systems, fail in banking, and where execution certainty is required. Identity and KYC persistence. In a voice or chat session, maintaining a verified state is difficult. AI often loses the thread, leading to abandonment. Disclosure integrity. Regulated industries require that specific disclosures be shown at specific times. AI models can easily skip these steps, creating massive legal exposure. The completion gap banks are excellent at starting workflows, but struggle to finish them. When an AI agent cannot securely capture a document or a signature, the session is handed off to a human, defeating the purpose of the automation. The solution: Callvu as the deterministic body for financial AI. The future of the AI call center in banking isn't just a smarter brain, it's the addition of a deterministic execution layer. This layer acts as a governor, sitting between the conversational AI and the bank's core systems of record. This is where Callvu changes the trajectory of financial automation. Callvu does not replace conversational AI or core systems. It governs how they execute regulated outcomes. Callvu provides the structural rails that allow AI to perform regulated tasks. Instead of the AI trying to guess how to process a wire transfer, it triggers a Callvu completion micro app. This micro app enforces the exact business rules, validates the data in real time, and captures the necessary e-signatures or photo IDs required for an in-good order submission. We've seen this transformation firsthand. In our recent case study on mobile approvals and e-signatures, a national bank moved over 750,000 annual approvals into this deterministic model. They didn't just automate the conversation, they automated the completion, resulting in a 74% reduction in wait times and a 9% lift in loan acceptances. 3 pillars of governed execution in banking. To turn your AI call center into a revenue-generating engine, it must be built on 3 deterministic pillars. These pillars are what make the governor real. Execution cannot proceed unless the system is compliant by construction. Forced compliance, gating Callvu, makes it structurally impossible to skip a disclosure or an ID check. The workflow simply cannot advance until the requirement is met. Visual evidence capture. Instead of the customer trying to describe a document, Callvu launches a mobile-first UI that allows for instant, AI-validated document uploads. Audit-ready trails. Every interaction creates an immutable log of exactly what was shown, signed, and validated. The business impact, from cost center to completion center. When you prioritize execution over mere conversation, the metrics of the financial contact center shift. Reduced nego rates. Data is validated at the point of entry, eliminating rework. Agent empowerment. By handling the drudge work of data collection, your human agents are freed to focus on high-value advisory roles. Accelerated speed to revenue faster signatures mean faster funding and quicker onboarding. The era of the probabilistic bank bot is over. The future belongs to the financial AI call center that can guarantee every transaction is finished correctly, compliantly, and with absolute certainty.